Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, here we are at the end of the second day of market closures in New York, and although Globex for equities and bonds were open for a short time today, they both were up fractionally. That's pointing to me that vol will probably be lower tomorrow. However, there's some bigger questions that vol traders are looking at, and they will be surely looking at tomorrow. The first would be term structure, especially when you look at equities or if you look at gold. Term structure has been sluggish. It's been flattening out over the last few weeks. Will that continue? How about realized correlation between equity and index implied volatility? There's been a vast divergence of trend between the two vols. Will that continue? But most importantly, it's really cross-asset volatility, or asset volatility contagion, as it were. What's going to lead the march for volatility? Because right now, vols are in everywhere. A few weeks ago, we were looking at gold, oil, credit leading the charge. Most recently, it's been sovereign debt. Right now, it doesn't seem like anybody's leading the charge, and all products are just kind of circling around in very, very tight ranges. One thing I do know for sure today is that FX vols were slammed today. Starting with Japanese yen 3-month vol was down 0.5% today at the CME. Behind me, we had British pound, Canada, Australia, euro currency, all down 1/4 vol today. A couple traders I was speaking to said all paper's been doing for the past couple weeks is selling strangles and selling straddles. Really hard to make a living right now. Moving on to livestock. Livestock, it's unbelievable to think, but December cattle right now is trading at an implied volatility of 9%. Traders I spoke to today can't remember the last time 6-week, 8-week vol has been as cheap as it's been today. And again, paper is doing nothing but selling. And on the other hand, open interest in cattle seems to be very, very low, keeping option implied volatility low. Lastly, corn volatility. December corn down 0.75% today. 8-week implied volatility right now is 20.75, 20.75. That's the lowest level we've seen in a while, even with corn going higher. Really funny. It just seems like every asset class right now is suffering in tight ranges. We had reasonably good news coming out of Europe with bank earnings. The hurricane is now basically behind us. And assets are just standing in a very, very tight range. It's going to be very interesting to see what happens tomorrow. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.